It's a little bit lonely, but yeah, I will try my best to explain you who we are and what we do and what sort of value we can offer you. MCI Capital is the first Central East European venture firm. We started late 90s. I mean, I'm sure most of you remember how venture capital started in Europe. It was the first fund which was created, venture capital fund, which was created in Europe was 96. Whom of you knows who was the oldest venture capital fund in Europe? No clue, okay. The oldest capital fund in Europe was 360 Capital based in Milano, okay? And then most of current leaders in Europe, they've been born around 96, 97, 98, 99, yes? That currently all these firms which are billion euro asset under management, they started around 20 years ago, late 90s. And do you know when the venture capital industry was born in the United States? Any guesses? No guesses, okay. I will tell you. The oldest venture capital fund in the US started in 1906, almost 110 years ago. Do you remember that time? No. Okay, there's one person living in the world which have 110 years plus. She can remember. This fund was started by the guy who was the owner of the largest oil company and Bessemer Ventures, and is still a very active fund, famous for LinkedIn, famous for diapers.com, and for many other very successful investments. We have one co-investment with them recently, okay? Good. That's about the history. That we are the history of venture capital industry in Eastern Europe. Okay. We focus on different stages of investments, close to 700 million euro asset under management. We do venture capital, growth debt, and buyout. Basically active in the whole region, which means we are investing from London to Moscow and from Stockholm to Tel Aviv. Yes, pretty large area. Last year we managed to invest in about 20 new projects, total close to 200 million euro, and we managed to exit about 150 million euro of our portfolio in about eight investments. What is common for our strategy is basically we follow digitalization trend. Yes, we are a big believer of digitalization trend, which means that we support digital disruption, which means completely new business models which are built by thanks to internet. Yes, we support digital transformation and digital adaptation. Yes, which means helping to adopt traditional enterprises to become the companies, successful companies during the internet era, and we also investing into digital ecosystem, which means all these logistic things, telecom things, financial things, which are needed to drive the growth of the digital companies. As said, we are present in these four different areas, which is venture debt, venture capital, growth equity, and buyout equity. 80% of our activities is unfortunately late, which means growth capital and buyout. About 20% of our funds are basically being allocated to venture capital and credit. We have a pretty strong track record of about 30 exits during the last 20 years, with about 24% IRR. That's our team. Together with me here is Tomek Danis, who is managing our early stage fund. Tomek is on the right, second line. Yes, Tomek Danis. That he's in the jury of the startup competition, and Tomek is managing our, let's say, venture activities within MCI. Yeah, maybe something more about our experience. Our first venture investment happened around 1999, and my first personal venture investments happened in 1994. That it's almost 21 years of the ongoing practice in venture capital investments. Currently, we are starting to fundraise our 5th venture fund. Already 4 venture funds was invested in Poland and in Eastern Europe. We have pretty broad experience. We've been investor in e-fashion, e-travel, e-electronics, e-glossary, other e-commerce businesses, marketplaces, software as a service, fintech, hosting data centers, telecoms, ad tech, and even gaming. That's where we are. Here you see some numbers about our exit track record. We have a couple of record transactions in our history. I mean, historically for us, the best market was a Czech market, where we generated close to 100 million euro of profits coming from our 3 very successful investments, Invia, MOL-CZ, and Fido. We delivered a lot of very unique value to the portfolio of companies we invested, which is a second round management, which is a management setup, which is the building different alliances with the partners, bringing best practices from other portfolio companies, helping to do M&As, helping to do IPOs, and finally helping to make a very successful high-profile exits. What is also interesting, currently we have like 3 companies which are starting, which are on a way to become unicorn. Yes. Recently, I think last week we announced that Auctionata, our Berlin-based global market leader in luxury digital auctions, just merged with the US competitor, and that will be like a dominant leading global platform for luxury auctions. We have another very hot company called GetTaxi. GetTaxi is a competitor to Uber, competing with Uber on the markets like New York, London, Moscow, and Tel Aviv. Another company with a very impressive growth and very impressive market position is iZettle. It's a European Square. And we have one company which was co-founded by the Polish entrepreneur Azimo, which is a global money transfer business based in London. This is on this corner. With a bolded letter of global, you see iZettle, Get, Azimo, Auctionata, and they are candidates to become so-called unicorns, companies which achieve the valuation of 1 billion euro. Yeah, that's the major information about us. As said, we are very active. We invested close to 20. We made close to 20 new deals last year. We have close to 200 million euro liquidity for the new investments recently, and we are looking to actively invest. Also actively invest in early stage. We hope to complete about 4 or 5 new transactions in this so-called round 8, round B. Our major preference is marketplaces, fintech, software as a service, and IoT. We prefer to see the candidates for European champions or for global champions. That's our preferred type of opportunities. Which means that usually we invest after so-called early stage, seed stage investors, trying to become kind of experienced partner to help the company's growth into the later stages. Good. I think that's a major information which I wanted to share with you, and happy to answer more detailed questions if there are any.
All right, great. Thank you, Tomasz. Let's start by just giving a big round of applause for Tomasz. So luckily, Tomasz agreed to stick around for a little while, and that we can go into details with some of the questions that you guys might have. But just to open up the discussion, You talked a lot about all the digital industries that you guys are investing in. Could you maybe give us a little bit of insights into, from all the hundreds of pitch decks you see, what are the most interesting trends you see in the digital industry these days?
I think that's definitely for us right now the hottest area is fintech. We believe that when you look at media industry and the impact of the internet in media industry, and that 80% of the current players in the media industry they're having a very huge impact of digitalization. I mean, basically newspapers, and they're completely changed by the internet. I think television is getting more and more into internet, and then the next sector which was hacked by internet was retail, and there are some sectors in retail where right now the level of e-commerce, the level of digital retail is getting to 50% plus, like electronics or like travel. Fashion, which 10 years ago nobody believed that fashion will be somehow impacted by digital. Right now in UK, it's about 25% of the revenue in fashion is done by e-commerce, and and probably also in retail you will see 50% plus of the business being done through internet in the future. And I think, and if you look at the financial services, it should be probably even more harder for the banks not to be significantly changed because of internet, because of digitalization, due to the very strong regulations of this sector, usually much higher degree of consolidation of this industry. That we believe that in the financial service market we will see even much higher level of digital revolution than what's happened in media and what's happened on retail. That's why we are very hot on fintech, and within fintech, I believe there is still a lot of opportunities in payments. I think payments are still very difficult. Like I was trying to buy some content 2 nights ago when I was in Istanbul, and my credit card was refused. It's still very, very unfriendly setup which we see even in such old part of fintech, which is payments. I mean, PayPal was established like 10 years ago, and then you have money transfers. Yes, another huge opportunity, which is challenging the traditional fintech, traditional financial service institutions, and is very fast growing. And then you have all this lending stuff, all this trading platforms, etc. There will be a huge revolution around fintech. I think you basically see like 3-4 capitals for the fintech revolution. Definitely it's London. There is a lot of things going on in Stockholm. There is some more activities in Berlin and in Tel Aviv, and I think we are one of the more active players within this subsegment of the internet market. Another big story we think is software as a service right now. That means that it's a very efficient, very efficient way of distributing software, and because through software as a service you can offer software with much higher prices, I think that will also expand the market for the software. Like before, software was okay. Software right now you have software everywhere, from banks through retail, everywhere. I mean, most of the all large enterprises and majority of the mid-sized enterprises, they need to run software. In our daily life, you see a lot of software like email, Outlook, etc., etc. But because of SaaS, software will be even more dominant, will penetrate even more industries, will help to improve productivity, and will access another fields of our life. And it's like mobile internet helped to develop e-commerce, helped to develop digital media. Then software as a service will also help to transition our lifestyle. and will create a lot of new business models. That we want to be part of that, and we want to support the development of software as a service companies, especially with a focus on the global markets. We think that fintech could be more European, more national-wide, whereas software as a service will basically a global play. Another very hot area from our perspective is, of course, marketplaces. We are part of few very successful marketplaces. One of them is Get Taxi. Uber is a marketplace.
So combining that with the whole sharing economy, that's something you see too?
Yes, but we see that as a marketplace because basically it's a trading platform between the suppliers, which are taxi drivers, and customers, which are customers, and of course that's also you can also call it sharing economy because I mean usually sharing economy are reflected in internet through the marketplace, mostly through the marketplace business models, and again it's helping to organize, optimize, sometimes even create new markets. Like we started, for example, the company doing genomics testing marketplace, like basically connecting people which are looking for different genomics related products with the vendors, with the suppliers of these products. That I mean, in marketplaces you will see a lot of B2B and C2C and B2C and even C2B markets being disrupted or created or completely changed and expand. And also you have to remember that if something is getting more productive, then also the things are growing. Yes, because I mean, probably right now because of Uber, more people are using taxis because taxis are becoming cheaper and available for easier and probably extended to higher degree of the society. Plus, it's also new logistics services being established through the platforms like Uber, like Get Taxi. Marketplace is definitely the third. Then there is a fourth. There is the fourth area which we are looking more and more. It's Internet of Things, which means the digitalized hardware or connected devices or wearables. What I remember is that there will be there's 7 billion people, 7-8 billion people living on the planet, which half of them are connected via internet. And because of mobile, I mean, this percentage grew up significantly because mobile internet is much bigger than the internet, the desktop internet. But another big wave in this revolution will be Internet of Things, because then there will be there's usually 5, 10, 20 devices which we are using, which are also starting to be connected to internet, which is car which I'm driving, which is my smartphone, which is my home, which is some of my favorite toys, etc. My refrigerator, for example, and that will create additional wave of the business models, additional wave of the optimization, productivity improvement, and big data, which will help to drive new business models.
So there's a lot of stages that's going to open the data, the infrastructure, and so on. I want to
let me finish with that. And I think most VCs right now are still not really understanding the impact of Internet of Things to the industry. It was very similar to the situation with mobile internet 5-10 years ago. When I was thinking 7 years ago about smartphones, and I was expecting, to be honest, the fact that because of mobile I will be able to shop when I'm in toilet, or I will be able to still read the news in my bed, or chat from every place every minute, but of course. That's happened 3-5 years later. That was maybe possible to dream about it, but the realization came much later and created a huge amount of new business models, which are huge valuation. I mean, Facebook right now is having such a valuation because of mobile, not because of the core business model. Instagram, I think it's getting volume because of mobile. You see more and more business models. Booking.com performance is because of mobile. Right now, mobile is becoming like 30%, 40% of the channel for e-commerce. Yes, and I think IoT will also drive similar evolution for internet development, and still majority of the business models are behind of us. We don't really understand what sort of things will come.
Okay, great. Agnieszka, can you pick up the microphone? We would like to have a couple of questions from the audience. Before we do that, there's just one quick thing I'd like to ask you. So then, if you have questions, think about the questions, have them ready in about a minute. Can you maybe sum up just the DNA in the companies that you guys are looking for? Can you maybe just point out three very important things, three of the core things you'll be looking for when you pick the winners?
Yeah, I mean, first we learned that great companies are built by the great entrepreneurs, and so it's very important. You basically invest in the person plus business model. Yes, you don't invest in a business model, or you don't invest in valuation. Yes, you invest in the person. Yeah. Of course, it's good to understand the segment, the sector, but basically the personality or the quality of the core management team or co-founders is super important. As we are usually later stage investor, we also like to invest with the high quality of early stage investors, and usually in normal way we rather invest after this top funds in Europe, like Axel, Index, Nordzone, Mangrove, etc. Right. That we believe that the quality of a seed early stage investor is very important, and especially recently we prefer to see the business opportunity which are scaling to the European level or global level, because it's very important. It's impacting the exit size and exit amount. And to make a proper returns, you need to build a large company, and then the business model should have the ability to become a pan-European or global platform.
Okay. Do we have any questions from the audience? All right, I have one more. Can you give us the kind of the cheat sheet into how to approach you guys? I mean, you guys are receiving a ton of presentations, slide decks, and everything. How do we get your attention?
Yeah, I mean, Tomek Danis is here. I mean, that's easy to access him. We are not a great investor for the idea stage. Yes, we really want to see the traction and the business growing, and usually backed by the solid business angels or by the solid early stage investors. Usually, we like to be approached by the early stage investors, which are presenting us the business. I mean, that's to be honest the easiest. I think 60-70% of the investments we are doing as a second to the venture capital, second to the early stage investor. That usually we're getting calls or proposals from investors which we know before. But of course we have some very successful investments which we did by ourselves. I think the strange thing with us is maybe that sometimes we are finding by ourselves these investments, because we are hearing good stories about the company, and we are simply calling the company or simply meeting the entrepreneur. If you look at our historical best performing companies, that was the companies which we find by ourselves. Yeah, that was not the companies which called us, or the companies which pitch their story to us. Yes, but of course right now we're doing also much more investments, that we are more open for companies pitching us. And then the best idea is to meet with Tomek Danis, Michał Wrzołek, which are running our early stage fund. Of course, please feel free to contact me. I will redirect you via email, via LinkedIn, that's probably the two best channels to access me, to the proper people within our management team.
Okay. Any questions that opened up? Yeah, there's one over here. Go ahead.
Your title of your presentation says about the tensions between
just a second, can we have the volume up on the mic?
Yep. The title of the presentation here in the program says about the tension between the founders and the managers and the VC funds teams. I would like you to tell some more about how you get those two sides on the same page. How do you get them to move together.
So, you got the question?
I think right now it changed a lot because right now we have a model of the multi-stage funding. Yes, that simply if you get too much tension between the founder and the investors, the company is not able to raise money. Yeah? That this is a very market-driven solution. In the past, like I think in the like 2003, 2004, 2005, usually there was one fund which was providing funding for the whole cycle of development. Yes. And also then the budgets to develop the break-even, to reach the break-even and to develop a profitable company was much, much lower, right? Right now the budgets for some businesses you need like 100 million euro to build a break-even in the company. That if there is too much tension between the founder and the investors, simply the company is getting problems with the funding, yes? And that's like a very natural way to solve the problem. Because I'm a strong believer that the best solutions are always the market solutions, yes? That okay, one fund or one person or one funder can be wrong, but if the whole market is wrong, it's usually unusual. That's then I probably see much less tensions right now than it was in 2000. It's also maybe because we are late. Yes, we are not early. That we are already in the companies which went through the early stage funding. Maybe there was some tensions with the early stage investors, and then we're getting like a more mature entrepreneurs and more mature projects, and already backed by the early stage investors. Yes, I'm completely against ideas like changing the funder. I think it didn't work, never. I think when you have to change the funder in a startup, it's the end of the startup, and I think startups built by managers are not working very well. That's another finding. Sometimes that's happened, the transition, because not all of the founders are able to manage companies above 100 million euro business, above 100 people staff. Sometimes they doesn't also want to do this because they have a different objectives in their life. And that's of course a big job to be done to transition the founder to the professional management team. And we observed that sort of transition in a couple of our investments. And yes, that's definitely a job which is a difficult job, and it needs a lot of attention both on the founder side and on the VC investor side. Yeah, that's kind of experience which I can share with you. Thanks to the fact that we are in a later stage, probably that save a lot of problems with the problems which you can sometimes face in the tensions between the founders and the first VC investor. I think for us probably the most cases like that we observed in the years 2000-2005. That was a period of the, let's say, single fund investing for the whole cycle of cash break even. There was not this natural regulation that okay, we don't agree on something, try with the others on the market. And second, there was also a huge prematurity on both sides, on the entrepreneur side, on the venture side. And also I think, especially when you invest, most of our growth stage investors right now are in Germany, UK, Sweden.
Excuse me, could you speak more to the microphone, yes, because we cannot hear?
Most of our yes, okay. Most of our growth stage investments right now are in markets like Germany, UK, Sweden, Israel, and I have to say the quality of entrepreneurs there is amazing. They are really like PhD in relationship with investors. Sometimes they manage investors' relations even too well.
All right, great. Sadly, our time is up. Tomasz, thank you so much for your insights. Let's give Tomasz a big round of applause. Thank you so much for joining us.